Hey everyone, welcome to today's Explainer. So, we're diving straight into Chapter 14 of Mastering Governance, the Art of Strategic Audit Reporting. And look, if you've ever wondered what actually separates a totally standard, run-of-the-mill audit update from a truly commanding boardroom presentation, well, you're in the right place. Today is all about that critical pivot point in corporate leadership, reports to those charged with governance. We're not just, reading numbers off a page here. It's about mastering the high-stakes environment of executive communication. We're going to unpack the exact source material that dictates how top-tier professionals handle this responsibility step by step.
Okay, let's take a quick look at the agenda. First up, the audit partner scenario. Then we'll look at the ACCA AAA mandated communication. Third, we'll do a critical breakdown of high quality versus poor reports. And finally, we'll wrap up with delivering commercial value.
All right, Section 1, the audit partner scenario. Time to step into the boardroom. I want you to mentally shift gears for a second. Imagine the heavy oak doors of the boardroom closing behind you. The executives are seated and the floor is entirely yours. This quote right here comes straight from our source material, and it really anchors our whole explainer today. Act as an audit partner presenting a final management letter and formal report to the audit committee and board of directors. I actually love this framing because it instantly elevates the stakes. You aren't just crunching numbers in the back office. You're the audit partner. You're carrying the weight of professional expertise and independence. The board of directors, the people steering the whole organization, are waiting for your insights. And, hopefully they haven't already fallen asleep. They want your interpretation of the data because your presentation is going to dictate how the company tackles its absolute biggest risks.
But before we get too far ahead of ourselves, let's make sure we're clear on our primary tool, a management letter. Simply put, it's a formal communication and report presented by an audit partner directly to the audit committee and board of directors. And it's really crucial to remember this isn't just some casual email, right? It's definitely not a quick verbal update. The management letter is a highly structured, formal document detailing significant internal control deficiencies, vital audit findings, and strategic recommendations. It's basically the physical manifestation of the auditor's value to the executive team. Nailing this document is the difference between an organization that just survives an audit and one that actually gets better because of it.
Moving on to Section 2, ACCA mandated communication. These are your baseline requirements.
So let's see how this all builds. Before you can dazzle a board with your strategic brilliance, you have to cover the absolute baselines. Under the Advanced Audit and Assurance Framework, ACCA AAA, there are incredibly strict guidelines on what has to be communicated to those charged with governance. The crucial takeaway here is that this communication is split into two distinct pillars. First, legally mandated communication, and second, professionally mandated communication. Legal mandates are your statutory requirements, things like confirming auditor independence, reporting on the scope and timing of the audit, and definitely disclosing any instances of fraud or non-compliance with laws and regulations. You literally have no choice here. The law mandates it. Professionally mandated communication, on the flip side, comes from auditing standards. This covers things like significant difficulties encountered during the audit, any disagreements with management, and those critical findings regarding internal controls. Together, these mandates form the unshakable foundation of your report. Miss these, and you've kind of failed before you even start. Which brings us to Section 3, High Quality versus Poor Reports, the critical assessment.
All right, so now we shift gears a bit. We know what needs to be said to satisfy the mandates, but the real question is, how is it said? Just ticking the boxes of legal compliance isn't going to cut it in the boardroom. What we're looking at here is a stark head-to-head battle. On one side, we have the absolute gold standard, reports that are high quality, clear, and commercially useful. And on the exact opposite side, reports that are poorly drafted, vague, or defensive. As an audit partner, your report is inevitably going to fall onto one side of this spectrum. So let's break down exactly what each of these looks like in the real world, starting with the winning formula.
These right here are the hallmarks of top-tier reporting, straight from the source text. This rule of 3 is what defines an engaging, excellent presentation. First up, high quality. That means the data is perfectly accurate, the logic is totally sound, and the formatting is basically impeccable. No typos or math errors distracting the board. Second, clear. Look, the boardroom is not the place for academic jargon or confusing text speak. A clear report translates complex audit findings into plain, executive-level language. It highlights the problem, the implication, and the recommendation without making the reader dig around for it. And third, commercially useful. We're going to expand on this one a lot in a minute, but essentially it means your report actually helps the business function better. It's not just an accounting exercise, it's a strategic business tool.
But what happens when things go wrong? Let's take a look at this one single word: defensive. Just imagine you're standing in front of the audit committee. They ask a probing question about, say, why a specific control wasn't tested deeper, or why the audit dragged on longer than expected. If your report or your actual physical posture is defensive, well, you've lost them. A defensive tone, whether it's baked into the management letter or spoken out loud during the presentation, implies you're protecting yourself instead of collaborating with the board to actually fix the company's issues. It shuts down communication, it creates this adversarial environment, and in governance, defensiveness is absolute poison.
And defensiveness is really just one piece of the failure puzzle. The pitfalls of poor reporting also include being poorly drafted and vague. Think about the executives reading this stuff. They are incredibly busy people. If a report is poorly drafted, disorganized, repetitive, no logical flow, they're just going to stop reading, period. If it's vague, using phrases like some controls need improvement instead of the payroll authorization control lacks dual signature verification, it's completely useless to them. They can't take action on vague information. When you combine poor drafting, vague language, and a defensive tone, you entirely undermine your credibility as an audit partner. You're failing those charged with governance.
All right, Section 4, delivering commercial value, moving beyond mere compliance. This is where the true art of strategic audit reporting really lives. The ultimate goal of assessing and refining this report isn't just to pass an ACCA, AAA exam, or tick off a bunch of regulatory boxes. The goal is to drive real, strategic impact for the organization you're auditing. Notice the key phrase we're focusing on here: commercially useful. Honestly, it's the hardest of the 3 hallmarks to actually achieve, but it is by far the most valuable. So how do you make an audit report commercially useful? You do it by connecting your findings directly to the company's bottom line and their strategic objectives. If you find some inefficiency in inventory tracking, you don't just report the internal control failure. No, you explain exactly how much capital is being tied up unnecessarily because of it. You provide a recommendation that fixes the compliance issue, sure, but also streamlines the business process, saving them time and real money. You're transforming abstract corporate governance into practical, actionable business value. And let me tell you, that is exactly what makes a board of directors sit up, lean in, and hang on your every word. So, I'm going to leave you with this final, somewhat provocative question to chew on the next time you're prepping a major presentation or report. Is your governance report driving commercial value, or are you just playing defense? Are you merely trying to survive the boardroom, or are you stepping into it as a true partner, ready to elevate the entire organization? Because that choice, it's entirely in how you craft your communication. Thank you so much for joining me on this explainer. I really hope this look at the source material has given you a fresh, powerful perspective on mastering governance. Keep learning, keep pushing for clarity, and I will catch you in the next one.